Cash out with a DSCR loan. What's going on, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for watching. I really appreciate it. The DSCR loans are kind of like my favorite loans to do now. Thanks to viewers like you guys who are watching this channel right now, the DSCR loans are by far the most popular loan that I talk about with many borrowers and clients across the country right now. If you would like to do this, I would love to chat with you about it, about your DSCR loan. But let's talk about doing a cash-out refinance with a DSCR loan. So DSCR stands for debt service coverage ratio. And what that is and what that means is that the income of the property and the expenses going out in terms of principal, interest, taxes, and insurance is a ratio. And we're looking at that ratio to determine if we're going to be able to lend on the property or not. So the cool thing about DSCR loans, we're not looking at personal income. We're not looking at, things like that, because, that's a big factor. So if you don't have a job, but you have an investment property, you can still do a cash out on a DSCR loan. So that's a cool thing that you could use for these types of products. So here's a couple of things that you may want to do if you're going to take cash out with a DSCR. You might want to do a recoup the cash that you use to rehab the property. So one of the most popular things that I talk to investors about is the BRRRR method. Buy a property, renovate the property, refinance the property going forward. And so you need to take cash out to try to recoup some of your investment oftentimes. And you can do that with a DSCR loan. In fact, there's a couple investors that I have that don't require any seasoning. So you could buy the property 1 month, you could fix it up the next month, and then the third month you could take cash out all the way up to 75% loan to value. You can take out the cash that you put into the property, and hopefully you improve the value enough to be able to get your money back and still have a cash flowing asset going forward. So recouping cash is a good thing you could do with a DSCR transaction. You can pay off the private or hard money that you used with a cash out or with a cash out DSCR loan. So oftentimes as investors, there's different ways that we can get into property. We're not always doing conventional loans and whatnot to buy property. We might use hard money or private money to be able to get a deal. And that gets us in the transaction. Maybe you have some funds to, fix up the property going forward. But those interest rates on hard money and private money is pretty darn high. It's just a means to an end, though. It's going to help you get the property. And then the DSCR cash out is going to give you a lower interest rate, most likely going forward, than that private or hard money is. And that's going to allow you to have a more long-term permanent type of financing on the property to help you make sure that property is cash flowing asset going forward for you. Lastly, you could take cash out to do the improvements on the property. So maybe you already own a property, you've got a renter in there, and you want to make sure that you improve the property going forward. Maybe you want to redo the kitchen for them or a bathroom, or want to kick out some square footage or whatever it is you might do. A cash out refinance with a DSCR loan might be the right option for that type of a scenario if you have an investment property. Okay, so let's look at some of the guidelines in terms of DSCR cash out refis and what those things look like. So loan amounts, we can go all the way up to $2.5 million and even $3 million in some instances with DSCR cash out refinances. Now, the key metric here with DSCR loans is that the property still has to cash flow if you're taking cash out. So depending on, how big of the project, how much cash you need, how big of the loan amount, the property still has to cash flow regardless of what size of loan that we're going to do. So always something that to keep in mind when you're taking cash out with your investment properties. Obviously, this is for investment properties only. We can't do any second homes or primary residences with this type of a transaction. We don't need any personal income or employment verifications. So none of that information is required when you're doing a DSCR cash out refinance. There's no limit to the number of properties you have. I've seen, investors with 60 or 70 properties. So you can definitely take cash out on your investment properties with a DSCR loan. And then 30-year fixed is probably the most common that I see, but there's also ARM products available. And remember, these are residential DSCR loans. So when we're dealing with commercial, the parameters might be a little bit different, but when we're doing residential DSCR loans, so anything from 1 to 4 units, 30-year fixed is probably the most prevalent type of a loan that I see with the cash out refis. There are some investors out there that will allow for an interest-only payment, which I really love, because that's going to really, really kick up your cash flow, especially if you have like a short-term rental or even a long-term rental that's really, really cash flowing. Cash flowing is very important. And remember, you can always pay more, but you can never pay less. So the interest-only option oftentimes will help give us what the minimum monthly payment is for that transaction going forward. Okay. You need as little as 3 months worth of reserves for DSCR loans. cash out refis. And one of the cool things about DSCR cash out is oftentimes you can use that cash out as reserves. And just remember, a reserve is just 1 month worth of principal, interest, taxes, and insurance, the monthly payment. And then if you take and multiply that by however many months we need for reserves, that's what a reserve calculation is for. It's just a risk calculation, by the way. It's not money you have to actually put in the transaction. Lenders, because of the way that we allow you to qualify with just the income of the property, they want to make sure that you have the financial capacity to make some payments in case your renter falls out, or you don't have, maybe your rental is seasonal and like in the wintertime, you're not getting any people coming into your vacation rental. So the reserves is just a risk calculation for lenders, but it's money that you need to have, not necessarily liquid, but on the side just in case. Okay. We need up to 80%, or we can go up to 80% in cash out. So if you take out that much, it's more likely going to be a 75% max, but there's some investors will actually go up to 80%. If you go up to 80%, terms are a little bit stricter, and there's not a ton of lenders that'll go up to 80%. So just keep that in mind. So try to keep 75 as the baseline, 75% loan to value is your baseline going forward. Credit score is down to 640. Just like all loans, like the lower the credit, the worse the terms are going to be. I like to do stuff, if you're hopefully over 680, 700 is probably a good place to be at a very minimum. And that way you're going to get better or the best terms, especially if you're over like 740 going forward. So, but we can still do credit down to 640 on banks or on DSCR transactions. There's no seasoning on cash out. So like I mentioned at the beginning of the video, you can actually take money out of the transaction right after you purchase it. There's no time frame with a couple investors that I have. That's pretty cool, because normally like on conventional loans or other jumbo type products, you got to wait 180 days. And in some instances, you have to wait 1 whole year, 365 days to be able to take cash out on property. So it's important, to kind of know your exit strategy on the types of loans that you're going to do when you are going to cash out refinance into a DSCR transaction. And just know that if that's something you want to do, I have something that's available for you to be able to do cash out without any seasoning. We can do non-warrantable condos on these, which is pretty cool. It's not every single condo that's non-warrantable, but it's some properties that are non-warrantable. So just keep that in mind. And then we're actually we can use the actual rental income of the property as long as we have a 12-month history, and that's for both short-term and long-term rentals going forward. So we'll still probably have to do a rental survey as it's based in the appraisal process, but at the same time, we can use whatever you have, because maybe you have better than market rents on that property, and you can show a history of that going forward. We can use that to help you with the DSCR. And then lastly, short-term rentals are allowed, as I've mentioned a couple times in this video, and those will help us, the DSCR cash out. Actually, those types of properties with short-term rentals tend to cash flow even more than long-term rentals do, because oftentimes you have 2 or 3 times the amount of income coming in that you have expenses going out on a property with a short-term rental. But those can be a little bit more complex as well. So just know that option is available for both short-term and long-term rentals. Okay, if you need a DSCR cash out loan, I'm going to put my calendar link down below. Go ahead and click on that and send me a link, and I will talk to you soon. Have a great day, guys.